Hey everybody, Mike Vaki here with Princeton Trader. Just wanted to hop on real fast. I want to get back into the habit of explaining to people during the course of the day some of the things that we do, some of the things that we look at when we're talking about the market. Today is a really good example. So building off of the webcast this morning, we talked about how the bears needed to show themselves in areas like the 9-day. So this blue dotted line is your 9-day simple moving average from the daily chart. We come down into 10:30, 11 o'clock, and it was a nice little short. You see here, this is weekly pivot. See weekly pivot hold here as resistance, and they actually come down, the bears, and they do a lower low. This is one of these situations where if the bears can go ahead and seal off something like the 9-day, if they can convert our proprietary lower level to resistance, you really had a chance to go deep and reach down towards something like 4,400. Here's the problem. So often, the bears just can't convert these key prices. They couldn't deal with 32.5 a few times. They could not convert S3 off of the daily pivot, lower level, or the 9-day. So what did we do in the room? Well, we were short. That makes us cover. You know, we talk all the time in the webcast. You see an area that they can't convert, you draw a line under that, and you say, the bears have got to convert this area or we're going to be on the other side of the trade. So we had the 9-day holding. The AD line was at 0. 10 to 15 handles above here, it was at negative 300. So internally, the market was already rallying from the individual stocks, and the futures were actually lagging the internals, which is not unheard of, but it's pretty rare, and it always gets my attention. That says bounce. Low window on some of the proprietary clock type stuff that we use in the room. And, you know, for me at that point with the room, I said, look, if we're going to get nailed, we're going to get nailed on a long right here. This is where, if we're going to take a -1 or a -2, it is having conviction that the bears have got to prove themselves to us. It's a good setup. We're in there 34.5. And, you know, as I'm taping this, you know, we're printing 49, 59, 75, 60. And, you know, there's a real reality. It's 2 o'clock in the afternoon Eastern time in the next couple of hours. They go ahead and they print another all-time high. Why? Because internally it was saying rally. You had key areas that could not get converted, and off we go. So by 10:40, the 9-day holds. They couldn't make the bias below our level. The low window is holding. Until that changes, we are long. And we were able to build on what was already a really nice day, but most of that was short. So we've taken profits. We're hanging out in this trade, and we'll see how the rest of the afternoon goes. But I'm going to jump on periodically with these videos to really just underscore to folks, if you want to learn how to trade this stuff, if you want to understand price, whether you're trading minis or you're doing other things, if you want to understand price, if you want to understand how to trade support resistance, we are here to help. So I hope you get something out of this. If you want to learn more, come check out the room. Take care, trade them well. I'll see everybody for tomorrow morning's webcast. All the best. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.